being sold at a fire sale to a competitor. So by the time I went to start my own company, I had sort of seen that it can feel really great and then feel really terrible 6 months later, and it's the same company. And so you just can kind of never trust what's happening. And you always have to, be looking down the road and see what's next. I started my company because I met a woman on an airplane who had an amazing idea that I loved. And I just knew in that instant that I was going to start the company with her. It was the weirdest experience. It was like, I just got goosebumps when she pitched me the idea. The idea was, let's create a store. I don't know if there's Build-A-Bear in Australia, but we have Build-A-Bear in the US, which is, you create your own bear. So it was Build-A-Bear, but for books, a store for kids to create their own books. And I grew up in a literary family. My mother was a literary agent. My father was a book editor, and I was absolutely passionate about kids and literacy. And I wanted to start this company. So we did. We decided to become business partners on the plane. But for me, it was really about like feeling really connected to the mission, and also really excited about solving the problems that would need to be solved to bring that thing into existence. So I was fascinated by the intellectual problem of it, and also really passionate about the mission, and solving the problem of kids kind of getting disconnected from reading and writing because they're too busy on screens. And this was really 20 years ago, even before we had these small screens. It was already a really big problem. So it was a very personal thing for me, which I think is really important. I think founders need to have a personal connection, not necessarily personal experience, but come from a place of real deep personal interest in solving whatever the problem is that they're working on.
Yeah, I love that. And reflecting back on the journey as for you as a founder, what did you get right and wrong back then?
Yeah, I think some of the things that we got right were we really built a community around the company, which was called Scribble Press. So we knew it was important to build evangelists, and we did that very early on, including raising money from some people who would become the biggest advocates for the company and help us, with marketing and getting the word out early. People who were really customers first and investors second. That was one thing we did right. We really kept focused on creating the right experience, because we knew if we created a great experience, the business would follow. And the big mistake we made, which is common to a lot of startups, was growing too fast. So in terms of putting it in sort of tech company terms, I would say we hit the gas on customer acquisition before we had product market fit. And in this particular case, what that meant was we really hadn't figured out the single store economics and how we were going to make money, both in January and then in July, which looked very different. And we started growing. We launched 2 new locations. So we had 3 locations before we even figured out what 1 year full cycle in one location looked like. So that was, and when you have a retail business, that's deadly, because you have a massive cost structure. You can recover from a mistake like that with a tech business in some cases by just pulling back your spending. But when you have things like leases and 50 employees, it's very hard to kind of change your cost structure once you've expanded too quickly.
Yeah, it's almost like testing it all early before you have too many fixed costs and people, and yeah, well.
Yes, that's the lesson. Where were where were you back in the early days?
All right, well, and I know you've had a long career after that as well, but then you moved on to Techstars for 4 years in LA. So I'm really curious, because you would have worked with hundreds of founders. Like what kind of traits did you see of the great founders compared to the good founders?
Hundreds of founders. Yes. I think there is no better preparation or training for being an investor than running an accelerator like that, because, thousands and thousands of teams I met, pitch decks I viewed, and then hundreds of people, as you said, I got to work with. I think for me, a few things stand out of the truly great founders. I would say like deep curiosity. So the perspective of asking questions as opposed to the perspective of already knowing the answer, right? So I cannot tell you if you think about the trajectory of someone that asks 25 great questions a day versus someone that doesn't, and how much the first person is going to learn versus the second, that is going to be a massive difference over the course of a year. So that's number one, kind of just deep curiosity, like approaching every interaction from a perspective of asking questions. The second one I would call is like combined with that, strong opinions loosely held. So have a really strong point of view, but then you have to be willing to completely change it if all those questions you're asking lead you in a different direction. That is a very hard balance because you have to have both conviction and the ability to convey conviction, but then also the ability to change your mind, right? And actually throw out your old idea, which for some people is very, very hard. So that's kind of related to humility. And then the third thing I would say is just like an obstinacy, like a grit that just borders on irrational obstinacy. You know, I used to tell people this, the only one thing that's different between founders that succeed and founders who don't is the founders that succeed didn't give up. There is a point at which there are 1,000 decision points in a startup when you think it's not going to work. And there are people that persevere through those and make it. And there are people that quit early and will never know. And then they're the people that keep going too long, maybe, and it doesn't work, right? It's not that you're always going to be successful if you continue on, but you will definitely not be successful if you quit. So it's having that ability to just go one more cycle, one more turn, try one more thing. So those things combined, that curiosity, that ability to hold a strong opinion but change it, and then that grit to keep going, like those are the things, you know, that really distinguish the great founders.
Yeah, I love that. And then, especially to the question of humility and curiosity, how do you find those qualities in the pitch? Yeah, like you meet a founder for 30 minutes. Like, how do you actually get the idea of whether they are actually have those qualities?
So it's very hard to do in just a pitch. You can hear it sometimes in terms of how they tell stories or how they respond to a question. So if I ask a question, and someone says, oh, that's an interesting question. Here's what I think about it, right? And they're really engaging in a dialogue. That's a great sign versus seeing a question as something to be kind of knocked down, or I already have the answer to that. Let me just volley it back to you. I don't want a conversation to feel like a ping pong match where they're just trying to get the ball back over the net. I want to think about it. The best conversations feel like we're building something together, right? So I say something, you build on it. I say something else, you build on that. So that I really look for that in those early conversations. How much interplay is there? How much interchange? The second thing I look for is what's the quality of the people around that person or those people? Who have they been able to enroll in their vision and get to come help them build? Whether it's advisors, whether it's employees, but that says something about the trust that person inspires. You know, and then, you know, look, we look for things like, you know, somebody that has gone through a lot to get where they are. You know, someone that has been creative in getting resources, and has done things that might sound a little crazy. So sometimes when you hear people's personal stories, you can really hear that grit.
Actually, on that part, would you have a story of that grit where you saw it, maybe not even the founder in that startup, but in their personal lives or something like that, where the story still stuck with you, or like, I can't believe they did that?
I mean, yeah. So there was one story of a founder that we invested in recently, who made the Olympic rowing team, even though he was 4 inches shorter than probably anyone else on the team. And the way he did it was he figured out how to be the most valuable person in the boat by making everyone around him faster. And that was such a great example of, you know, grit, but also intelligence and self-awareness knowing I'm never going to be the strongest or the fastest because I'm just not big enough, but I can play a different role. What's the role that I can uniquely play? So that said a lot about that founder's personality and how he approached problem solving. And also
Yeah.
level of ambition, right? I mean, for someone to say, I'm going to make that team, even though like no one my size really ever makes the team, I'm going to be the one. Like, I love that kind of ambition and drive.
Yeah, and I mean the team being the Olympic team, so that's very impressive. So finally, you joined M13 4 years ago. Tell us a bit more about M13. What makes M13 special?
Yeah, M13 is a venture fund managing $1 billion in assets. We've got 13 partners spread across Los Angeles, New York, San Francisco. So we are a growing firm. You know, we're not totally new. We're not one of the big ones. We're kind of in the middle phases of growing and scaling the firm. And the reason I joined was the quality of the partners and just the interesting backgrounds that everybody here had. So M13 is made up of all former operators, and our philosophy is, our strategy is to support our portfolio deeply after we invest. So we have, we've taken the idea of VC platform to another level. And we've got over 30 people on our operating team who dig in and help our portfolio once we've invested. We actually had this morning a kickoff meeting for a new portfolio company, and I could tell that the company founders were just kind of overwhelmed by the level of services and thought that we put into like how we support teams. It's everything from talent on organizational strategy to actually helping hire people. Going through your entire sales process to see how it could be better, making introductions in a really like systematic way. You know, we feel like the point at which we come in, seed or Series A, is a critical turning point in the life of any company. And you know, we want to be there with our entire partnership, you know, and team to help our companies kind of get ahead.
Yeah,
And
love
I
that.
was honestly a little skeptical when I first joined because like every VC says they do this, but the way in which we do it is like deeply impactful, and you know, I've become a believer.
I think the tagline on the website itself is "We do what every VC says they do," which I actually loved.
Well, that's a quote from one of our founders, actually. M13 is the VC firm that every other VC says they are. Yeah.
That's
I
awesome.
mean, and that's a little cheeky to say that, but like I really genuinely believe that we are that firm.
All right, moving on to the second part, which is Aussies and Kiwis in the US. I'm really curious on your take and advice for an Australian or someone from New Zealand founder. Where should they build their company? Should they relocate to the US? Should they build it at home? Like, how do you think about that?
Yeah, so I think a few things. I think, you know, in this day and age, I don't think you necessarily need to move somewhere to, you know, to address another market or to, you know, build a global company. I think it depends on what kind of company. I think if you have an enterprise product and you feel like the US is your main market, I think it's really important to be here. Enterprise sales is a personal business. It's sitting down with people. You know, you need to be in the market. It's really hard to get a company to commit to a, you know, $10,000, $100,000 sale if you're not actually there. So, so if you're enterprise and you want to address the US market, I think you have to move here. If you're building a consumer company with a product-led growth motion or something that's targeted at freelancers or small businesses, I think it's much easier to do it, you know, really honestly from anywhere. And I think then it's just about, do you have the messaging right? Do you really understand who your ICP is? Do you understand your customer? Are you speaking to them in their language? So just making sure that you understand that you're approaching them in the right way. But that's going to all be really online, right? You know, and consumers, you know, specifically, like just no need to be anywhere in particular. So I think it would be particular to like what type of company. I think the second part of the question is like where in the US, right? So if I'm
Yes,
going to
exactly.
move,
Yeah.
right? Is it San Francisco? Is it? And then I would say it depends on, again, what kind of company. I mean, LA is great for space tech, for defense tech, for biotech, for media and entertainment, for anything content related, for anything commerce related, consumer, gaming, any of those categories, LA is an amazing place. If you're building a deep applied AI company, you know, targeting, selling to other software companies, you'd probably want to be in San Francisco. If your target is financial services firms, you know, anything in the advertising, you know, or print media space or anything, you might want to be in New York. So I think it would be really go where your customers are, and where the other companies that are similar to where you are. Just the same thing as, you know, the flavors of, you know, different Australian cities. I mean, you know, would be, you know, very, very different industries are kind of distributed around. So I would just say, like, follow your customers, go where they are.
Yeah, that's actually been interesting to hear New York versus LA and San Francisco. On the part of everything's virtual now anyway, I'm actually curious, when you have a first pitch from a founder, what's the percentage of virtual versus in-person pitches that you get these days?
Almost 100% virtual.
Yeah, wow. Okay. So it actually literally doesn't matter if somebody's in the US right now or pitching you from Australia.
But part of it is efficiency. We take so many first meetings, and it's just less time to talk to someone online than it is to go somewhere and meet them and have a coffee. And, you know, so it's about being efficient with time also. I think it's a great innovation. And I think on balance, people are probably getting more first meetings, so they're getting more exposure and more chances to pitch someone because we can set up a 25-minute Zoom meeting.
Yeah. On what about the cultural differences between Aussies, Kiwis, and Americans? Like, have you seen any there? Like, what are we uniquely good or bad at?
Oh my gosh, I so don't want to generalize at all, because I think that there's so many differences within each geography, right? Probably way more than there are across, say, Australia or New Zealand or the US, are the differences between, you know, people that just have different personalities and different approaches and different backgrounds, et cetera, et cetera. I mean, I think one important thing is US founders tend to be very blinders on and US centric, right? And think that it's the only market that matters. Whereas Aussie and Kiwi founders like understand from day one that you have to consider, you know, the world markets and consider markets outside their home country. And I think that is extremely valuable because it gets you thinking globally, like from the beginning. So I think that's, you know, that's important. I think, you know, there's probably a little bit something about risk tolerance, you know, about maybe some flavors of US founders being more risk tolerant or, you know, being more, I don't know, aggressive, you know, but I don't know if that holds true. And again, I think it's the type of thing where it's a generalization. So you know, I
Absolutely.
always hate to generalize. It's like someone asking me like, oh, you know, what are female founders like, or what are male founders like? I don't, you know, I don't know. Everyone's an individual.
Yeah, no, 100%. And everybody should be playing on their own strengths as well.
Yes.
Um, what is the best way to approach someone like yourself and get an introduction to you?
So, I mean, here's the secret. Cold inbound emails are totally fine and they work. I will tell you that I look at all of them. I will tell you that there's bad cold inbound and there's good cold inbound. So the problem with doing good cold inbound is it takes time. You can't just send out a, you know, mail merge to a lot of people. That's just like throwing spaghetti at the wall, as we like to say. But if you do your work and you have chosen someone because of what their portfolio is, not the firm necessarily, that particular investor, what they've invested in, right? And you approach them with a personalized pitch based on the companies they've invested in and what you know about them, you have a really high degree of getting a response because you've taken the time to like understand who that person is. But yeah, that's time consuming.
Yeah. I love that. Well, so yeah, cold introduction or like cold outreach can definitely work.
I mean, if you're going to get an intro, the best possible intro is from a founder. That's the absolute best, right? Is a founder in their portfolio, a founder that knows them. You know, the next best would be another investor. The question always comes up with an investor introducing another investor is, well, are you investing? You know, so that always gets a little complicated. But yeah, so if you have a warm introduction, by all means, you know, use that to your advantage, but don't be afraid to just send someone an email, you know, or a LinkedIn message or, you know, whatever.
Love that. All right. Well, third topic for today, the thematics that you love investing in. What gets you really excited these days?
Yeah, so I generally invest in what we call future of work, which is really broad. So it's productivity tools, it's HR tech, it is freelancer and small business tools. So everything in that area, and then commerce enablement. And that includes anything that helps people buy things more easily, supply chain optimization, B2B marketplaces. So a couple of things I'm particularly interested in right now. One is B2B marketplaces. I've actually invested in 5, what I would call operationally complex B2B marketplaces. And so the reason I like these categories is because there is value there waiting to be captured. All you have to do is kind of knit together the buyers and the sellers. And the other reason I like these businesses is everybody in the equation is better off, right? So you're helping the buyers, you're helping the sellers, you're just creating value. You're not taking away any value. You're just taking something that was there and kind of making it better. So, so that's a category that I have just been consistently excited about. And with the advent of AI, there's just, it's an even more interesting category because there's all kinds of ways to use artificial intelligence to match supply and demand, to locate new supply, to price, you know, to generate complex pricing algorithms to help the marketplace kind of function more efficiently. That's category 1. Category 2, I would say, is knowledge worker automation, you know, across a range of vertical categories, but really focusing on actually delivering a service. So we're not talking about, you know, I'm a lawyer and I'm going to use this AI tool to help me do my work. We're talking about, I need a lawyer and I'm going to go to an AI service. That maybe there's a human behind that service, but really my first sort of interaction is with an AI. I think that's really the transformative opportunity. And what's interesting about the moment we're in now is things that yesterday might have looked like services businesses today are venture backable. Because when you lead with AI, you make service delivery of a service and an outcome, right? A result of that service, you make that venture backable where it wouldn't have been before. So I really think people building in AI for knowledge work should be thinking about not building picks and shovels, but building actual customer-facing solutions.
Yeah.
Number 3 is like really hard data problems. So there's such interesting stuff happening in terms of disease detection, in terms of inventory planning, supply chain management, like problems that were just too complex to be solved because there's too many different variables and too much data that needs to be processed. It could not be done before artificial intelligence. Now those problems have kind of reached, you know, addressability. So that's another area that we're really excited about addressing. And then I guess, you know, consumer, we were going to maybe talk about consumer as well. So I think that, you know, consumer has been, as a category, has been a little bit out of favor, maybe except for some bright spots like gaming. You know, for a long time, we haven't had a kind of new social network emerge for a really long time. There hasn't been a really massive new consumer business like an Airbnb or an Uber, you know, on the marketplace side emerge for a long time. I think with AI, I'm hoping that we will see some really exciting consumer businesses emerge built on AI, whether it's like personal productivity tool or it's some kind of new social tool combating loneliness, or whether it is, you know, your therapist in your pocket, or whether it's, you know, something new finally to help create something new in the dating space or the relationship space. But I do think that there is a ton of potential in consumer, and I'm hoping that there will be lots of founders working in that category to build something great.
Yeah. Oh my God, you've given me so many things. So I'm gonna unpack the categories one by one.
Great.
Let's actually start with B2B marketplaces, because they've obviously been around for quite a while. And the first question that I always get from founders is the whole chicken and egg problem. Like, how do I get started? Supply side, demand side. If I don't have one, I can't have the other. How do you see founders get started there?
Yeah, the cold start problem. So, I mean, that's one thing that we look at, like baked into the model is like, do you have a solution for the cold start problem? I'll give you a couple of examples. I have one company called Upwards. It's a B2B marketplace in the childcare space. So on the one side, the supply is small in-home daycare centers that are providing childcare, to customers. And on the other side are large corporations such as Amazon, and the Department of Defense. So the US military is actually a customer that want to provide childcare for their workforce. So how did they get enough supply to sort of satisfy this demand? They did it the hard way, I would say, sort of pulling, up by their bootstraps, building market by market. And so it took a while to get to where they are now. And now they have national scale. They have over 70,000 locations in the network. So now it's big enough. So that was one where they didn't have a secret way of kind of jump starting. They just had to start the business really small. But now it's at the scale where having amassed all that supply gives them a real moat in the market, and a real advantage. They have supply that, none of their competitors have. Another one company is Source, which is a procurement platform in the hotel renovation industry.
Oh, wow.
So the supply side is vendors of furniture, fixtures, and equipment. And then the demand side is contractors, designers, and owners of hotel locations undergoing renovations. So what they did was project by project. They took on a project, they onboarded every single vendor that contractor wanted to work with. And then they did the next one. And then eventually they started seeing some repeats. But, they just had to onboard the supply as they went, but they would procure the project first, then go on board the supply, knowing that they wouldn't be wasting their time to do that. So you have to have a kind of approach to that, rather than if you're in the position of needing to spend money or sort of customer acquisition cost on both sides, supply and demand, you're kind of in trouble. Ideally, there should be some kind of virality where as you onboard more demand, that naturally brings more supply and vice versa. So those are the kind of clever things that we look for, those loops, those reinforcing loops, baked into the business model when we look at these B2B marketplaces.
Yeah, I love it. Oh, I love the examples as well. Thank you for that. The second theme you mentioned was around AI, and you actually called it the knowledge worker automation, which I love. Within the AI space itself, like what type of companies do you see dying because the innovation is just happening so quickly versus surviving the long term because they have some kind of mode?
Yeah. So, if I had to predict what's not going to work, it would be more the automation platforms that are helping existing people, positions kind of do their work, right? So I'm an accountant. This is a platform that's going to help me be more efficient with my time. I don't think that's the strategy. I think the strategy is to be the AI accountant, right? So in other words, it's this idea of, are you taking an incremental step, but you're assuming that the way the work is going to happen is basically the same as it was yesterday? Or are you saying, now that we have this technology, let's completely reimagine this whole category, right? So what does the AI law firm of the future look like? That's the real question, not how can I build something that helps lawyers build their time, right? So this is a real company. It helps lawyers, automatically build their time. That's going to be a feature. That's not going to be a company that's going to be a multi-billion-dollar company. It's going to be a feature of something else. But the real idea is now that we have a way to automatically retrieve all of this information, because that's what practicing law is, it's information retrieval. So we have a way of solving that problem, the core problem of practicing law. And we're going to lead with that to deliver world-class legal services that are going to have humans in the loop, but really in the background. We're going to design an AI first legal service delivery. That's the company that's going to win. So I would say as a principle, it's about not thinking incrementally, but rather thinking about what is the most fully expressed vision that we can create with this new technology, number one. And then it's number two, being really focused on delivering results. So you're not providing software or a service, you are providing results. So you have to start from what was the original reason this customer needed to buy that service? They wanted a result, right? So
Yeah, I love it.
like they want a signed contract, they want a closed deal, they want to win the lawsuit. So when you start thinking about how can I deliver that result using artificial intelligence, like it just puts you in a whole different place of what you're building, than if you think, how can I make this person 50% more efficient?
Yeah.
Not
So you
wrong
could
question.
completely reimagining how a service works. Yeah, I love that. I'm very much like outcome driven here.
Yeah.
Um,
So I'll tell you one really exciting sort of side benefit from all this, right? Is I think we're going to have an absolute explosion of kind of the small business category and independent work. Because if you think about, okay, so let's say I'm doing a service that has to be done in person. You can't automate it with AI. Let's say I am, I'm a facialist. Okay. So I'm really good at giving facials, but I am terrible at finding customers, building a website, making appointments, billing people, knowing what to charge, like understanding innovation. Oh, ordering my supplies. I'm terrible at literally everything else around that. There is an AI service. So let's call it business in a box for me that does everything else. So all I have to do literally is do those facials. I think we're going to see an absolute revolution of people being able to launch and effectively manage small businesses by accessing these end-to-end solutions. And so that's another category that I think is really, really interesting right now, the business in a box.
yeah. Well, I can't wait for that future because that's going to make a lot of lives a lot easier. Um, Pulling on the last thread you mentioned, which is consumer. I'm actually really curious here. What what the best consumer companies do to make them successful. I think one of the things you mentioned on a couple of podcasts previously as well is that the cost of acquisition for consumer companies almost always starts low and only ever increases because it gets harder to acquire customers. Like, what do you see the best consumer companies actually do really well?
I mean, I think the best consumer companies have a solo player mode. So it doesn't only become useful if other people that you know are using it, but also have built in a natural virality where it's more useful, more fun, more enjoyable if other people you know are using it. So, I'm trying to think about some great consumer products that I love, that are not, I mean, just even take, Instagram solo player mode is great. It's an enjoyable browsing experience. I'm going to see interesting things. Instagram is way more enjoyable once I am enjoying it with my friends and kind of seeing what they're looking at and seeing their content. And I think that's true for a lot of these AI tools as well. Excuse me, I might need to go get some water. Can you give
Oh
me a minute?
no, absolutely, place it. Brief intermission, and please do pop your questions into the Slido. I can see quite a few upvotes there already. I'm just gonna post the link one more time. Just over here. And just upvote the questions you'd like me to ask. We'll go into question time in 5 minutes. Anna, you're back.
I'm back. Sorry about that. So yeah,
Um,
so look, if I could unpack or predict what the next big consumer thing would be, I mean, I'd be very happy. I can't. But I do think some of these platforms like character AI, where, people are just spending hours engaging with them, and then some of the creative tools, some of the generative AI tools, whether it's ChatGPT, which frankly has really become just part of many people's, including mine, like daily workflows. It's just so incredibly useful. Or some of the art tools. Like, I mean, I think that some of these have really figured out single player mode really well. So the question is, how can you then layer in a social aspect to those to really get a viral loop going?
Awesome, love that. Thank you so much. All right, which brings me to the final part, which is the Slido questions. So I've got quite a few questions here from our founders and upvoted as well. The first one coming up is how do you define a seed round, and what do you look for in a seed round?
That's a great question. I'll say first of all that our bread and butter is really Series A. So I'll speak to seed and then I'll speak to Series A. I think for seed, we're looking for a product in the market, some revenue, some customer traction, but maybe have not really fully cleared product market fit. I think so that's in terms of where you are. I think the other thing with a seed round is, for me, there has to be a very, very clear definition of what you're going to do next, right? So a really clear roadmap of, with that seed round, here's what we think it's going to take to get to the next round. Because usually at seed, you're not looking at getting profitable. You are heading towards doing another round. And so I want to know with great detail, like, what are the plans and what are the prospects for kind of crossing that chasm to get to the next round. And then, and I think early signs of customer uptake, positive customer signs, retention, customers making referrals, something kind of in that vein, showing momentum, right? At any stage, I think all investors are much more interested in velocity and momentum than they are in sheer numbers. So a company that has reached $1 million in revenue in 4 months is incredibly interesting. A company that is at $1 million in revenue that took 4 years or 5 years might be interesting, but you'd ask a lot of questions about why did it take so long to get there. So whereas the first company has clearly found something, that's working. Yeah, so that's first seed, should have a product in the market and some revenue.
Yeah.
Yeah, and then Series A, I mean, in general, 2 to 3 million in revenue, strong pipeline, good signs of product market fit, the teams coming together, like a lot of the key team members in place, a great hiring plan, and a growth plan. But it's all generalizations. I mean, it's every company is different.
Yeah, absolutely. The second question I've gotten here is, because you mentioned all the way at the beginning, you've got 13 partners across so many different cities. How do you make decisions? How do you decide which company to invest in? Is it a majority vote, everybody needs to be in?
So we have investing partners and operating partners. So the investing team is smaller. That's 6 partners in that meeting. And that's the group that's deciding. And, I think these groups can be functional or dysfunctional. We have a highly functional group. And what that means to me is, or the reason why I say that is, we have a culture of really deeply thinking and engaging and wanting to get it right, not to be right. So it's a culture of wanting to ask the right question to get to the right answer, and everybody being on the same page that that's what we're trying to do. So I don't ever walk into that room going, oh, I want my deal to get through because it's mine. It's like, I really want to know what everyone thinks, because I know that's going to help us make a better decision. So we do tend to get there on consensus because we're willing to ask hard questions and challenge each other. Like, and so if you have a culture where you're able to challenge directly while also understanding that everybody has deep respect, right? Those two things at the same time, like that's what makes a good investing team, like to me.
Yeah. So on the thread of investment decision making, there's a couple of questions around valuations. Actually, the first, the one which just popped up at the top is, do valuations differ if a company is Australian based versus US based?
I mean, off some a few data points I have, I would say yes, it does seem like in general, valuations in Australia for the same revenue might be slightly lower. That might be baking in the like market sort of risk or something, or the risk that you might need to expand to a bigger market in order to capture more revenue. So that might just be a reflection of the fact that not knowing how easy it's going to be to jump, to a larger market or expand to a different country. But it does, yeah, seem like that's true. But that's also true regionally in the US. Like you might find a company in a smaller state that doesn't have a big startup ecosystem, and that founder might have less access to a lot of the investors than a founder that's sitting there in Silicon Valley. And those two companies could be the exact same company and also have a different valuation. So yeah, geography definitely plays a role.
And staying on the question of valuations, or actually this one's around ownership. Is there a particular way you think about ownership when you buy a company, that you want to be buying a certain percent of a company across the different stages of investing?
We do think about that. And part of it is that we have this really, involved model where we're putting a lot of our time into our companies. And so it doesn't make sense for us to be a small investor. We really want to, 15% is the number that we think about as our target. That's how that's how we model out our business. And that's an amount that, we really feel like an important owner and with vested interest in our portfolio companies and their partner in building, and we have the incentive to work alongside them to help the company be successful. But importantly, it's not so much that it's highly dilutive for the founders. We don't like to see companies where, 60% of the equity is owned by the investors and then the founders keep getting squeezed, because ultimately it is the founders that are going to make the company successful, not the other people on the cap table. And the founders have to really be, the majority owners.
Yeah, love that. The next one's around the deep tech and biotech space. So it's quite different here. But question which I get all the time as well is, a company like that, which takes a long time to market, how can they position themselves well to raise a seed round?
So I think the first thing is knowing which investors actually do deep tech and biotech, because that's a very specific list of investors. We don't do it, for example. Like, I mean, you might consider applied artificial intelligence deep tech, in which case we do, but we're not investing in hardware. We don't invest in space and defense. We don't invest in, wet biology. So, anything touching pharma or, genetics or anything. We invest in healthcare technology. So it's just not, we're just not the right person to pitch. So if that's what you're building, you just have to do an extra level of diligence to kind of find the investors that are investing in that category. And the ones that do understand the cadence of how those companies get built, right? And the type of risk. I think the reason why it's so many software investors tend not to invest in those categories is there are types of existential risk that we don't know how to underwrite. So let's take a hardware company whose customer is going to be the government. I don't know how to figure out how many rounds of capital that company needs before they're going to get a big contract to sell something to the government, or something that has to be FDA approved, or approved by the government before you could sell it. We don't know how to evaluate the risk, and that's a binary risk. It's either a yes or a no. So there's so many other risks associated with this startup of, will the product work? Will the market come? Will the team execute well? Will they use their capital efficiently? We don't want to layer in that existential risk that we can't really measure.
Yeah, makes totally makes sense. So back to B2B marketplaces and AI enabled. And what's the killer company metric that makes you lean in?
I think the reason I love B2B marketplaces is no one metric. I mean, there's supply growth, there's demand growth, there's sell through, there's take rate, there's repeat rate. I mean, these things are so complicated. There's market penetration, and then there's like, have you successfully layered in SaaS fees? There's just so many, there's no one killer metric at all. I mean, I think that, yeah, I mean, I think, GMV is the obvious one, right? Is your GMV going up? But you have to really look under the hood of GMV to really understand, like, is it working and what's making it work?
Hmm.
And that's why it's so fun to me, is because they're very complicated.
I can hear the passion come through here. On the note of looking under the hood, the question here is around data rooms, actually. What do you expect startups to have in the data room when you look at an investment?
Okay, so first of all, having a great data room is a massive advantage. If you are trying to run a process, right? And by run a process, I mean, you want to get all your investors on the same schedule. So like, now we're giving you the inside baseball about how to, like, I said one time to one of my founders, like, you run the process, don't let the process run you. And get your data room set up at the beginning and kind of give it to everyone at the same time, because then no one has an advantage. The way that data rooms normally get built is the founder doesn't have one, an investor asks for something, and then the founder says, oh, that's a good thing to ask for, I'll put it in the data room. Then a different investor asks for something else. Oh, it goes in the data room. And so the data room gets built during the process. Don't do that. Figure out what you should put in there, put it in the beginning, and don't start doing your process until everything's in there. And then you make everybody look at it at the same time. And also you look super organized because you have this like amazing data room and has all this stuff in it. And it makes a great impression. So I didn't even answer the question yet, which is what should go in there. You want to have a section on customers. That's probably your most important section. You can anonymize it if you want, but if you have enterprise customers, you should have a list of all your customers. How many months have they been paying you? For the ones that churned, why did they churn? To allow someone to look at that data and do whatever analysis they want on it. So that's really important. Same thing for pipeline. You can also anonymize it, but have your pipeline in there. So that would be the customers section. You could have a description of who your ICP is in that section if you wanted. You could have customer testimonials, and that would be customers. Product, you want to have product roadmap. You want to have like videos of product walkthrough can be really helpful. So just everything about the product. You want to have a team section, who's on the team. Competition would be another section. And then the sections that you can kind of hold back or, only give out selectively would be like your financial projections or your cap table or something like that. But those would be the basics. So I would just think about it from the perspective of, what do you think are all the most important and compelling things to understand about your company that's going to really help someone understand why it's such an exciting opportunity, and then just organize them in that data room.
Oh, perfect. I love that detail. Thank you. This one's a
And
little
we
bit.
actually have a lot of great resources on our website, including about this topic. And there's also a great guide to what should be in your slide deck with actually some models of slides. So they're called rocket guides, and they're on m13.co. If anyone's interested, we spent a lot of time putting these together, and we think there's a wealth of amazing information in there in those rocket guides.
Amazing. I'll dig them out. This one's a little bit harder. It's probably looking for a bit of a story, which is what's the if you remember a story of a pitch where it was trending towards a no, but there was something that was being said, and it was like an instant yes instead, being like, oh wow, that really changed my mind.
I think the times, I can't recall a specific one, but I think the times that founders have turned me around, it's where I start trending no because I feel like they're too confident in themselves and just they sound kind of flippant and blasé, and they'll say something like, they'll say something deeply introspective, or about having changed their mind or something that shows that they, there's some cracks in the armor or something that will kind of draw me back in. Right. And so sometimes that happens when a founder thinks they have to come in and just pitch at you.
Mm,
Um, and then they kind of drop the facade for a minute and it becomes more of a real conversation.
I love that. Also comes back to the theme all the way at the beginning, curiosity and humility. Yeah.
Exactly.
Um, well, then I've got a good final question then to end this with, which is how do you help startups and founders? Um,
Oh my gosh. Okay. So me personally, I mean, what I want to say is I think you'd have to ask them, but I think what they would say is like I am always willing to sort of say the truth, but say it like kindly and like knowing that like I'm ultimately always on your side, right? I am always on the founder side. So I think that, but I respect the people that I invest in enough to tell them the truth. And if it's not going well or I don't agree with what they're doing, they're going to know it. But they know also that I'm coming from a place of deeply supporting them. And that's really important. You will find investors who, um, are less experienced and get worried and upset if you miss your projections. I can guarantee you you're going to miss your projections at least one time. The only thing we know about your financial projections is that they're wrong. We don't know if they're wrong upwards. We don't know if they're wrong downwards. We just know they're wrong. So anyone who kind of can't roll with that is, it's going to be a problem. So I think I have a strong stomach for dealing with change and, and an ability to kind of be a good thought partner to founders, and always like be their advocate and tell them the truth. But then my real job is to help them understand how our entire M13 team can help them and make sure they're building great relationships across our organization, not just with me, right? And that also might include other people that I know, right? Who I see myself as like, I'm just like the conduit to all the other great stuff that's available for them, right? I am not the one with the answers. So the more I can unlock for them by making other connections, the better.
Amazing. Well, thank you so much. Final question then is for founders, how can they connect with you and where can they find you?
So LinkedIn is really, where I spend my time lately, in terms of just, business social media. So I'm really easy to find on LinkedIn, Anna W. Barber. So please feel free to reach out to me, message me there.
Amazing. Thank you so much for your time. This was super insightful. So glad we had 60 minutes together.
Thanks, Michael. Thanks for the time. Great to see you.
Thanks so much. See ya.